Hey everybody, this is Jim at freechartvideos.com, where we use time-honored techniques to understand modern markets. This video is for educational purposes only, and it is not intended to be used as any form of investment advice. Look, now I can draw lines on charts, but you have to draw your own conclusions from your own due diligence and make investment decisions that are suitable for your financial situation. Even if I knew what your financial situation was, I got no business sticking my nose into your business. And even if I did try to stick my nose into your business, you have to realize I'm not a licensed professional. Just a guy who draws lines on charts. So let's look at the S&P 500. In yesterday's video, we had identified what appeared to be a descending wedge that was bounded by these two red lines. This orange line is the broken long-term, what I'm thinking should be a technically significant line. To be honest with you, there's no real guarantee on that, and you can see that when it broke, there wasn't really any great precipitous move or anything of that nature. So this is a line I'm keeping my eye on. I honestly don't know how important it is. Let me show it to you again on a 2-day chart. It starts down here at the very bottom, goes to this low point here at the right shoulder of this little inverse head and shoulder pattern, and you can see where it broke right here. So why do I say I don't know how important that is? Well, because it all hinges on what? It all hinges on the validity of this panic bottom back in March of 2009 as being a, quote, inbounds event. In other words, I made that term up. In other words, was this panic selling something that pushed the markets below the range of reason, just like a blow-off top, a big spike top? Doesn't always work when you want to consider that as a starting point for a new downtrend. But the line still needs to be drawn because it is still there. However, there is another line, which is this red line, that is from this reactive move, the first real correction we had after that bottom, then this second correction. Now we're in the process of apparently setting up yet another correction, or they call them correction, call it an intermediate trend or whatever. So I just wanted to show you that line. If we go back to our 30-minute chart, however, you can see that this, let's go back to the 10-minute. You can see that this descending wedge broke out today, and I would expect, frankly, a back test of this line. I'm really hoping there is a back test, because the way I see this, that would be, well, let's put it this way: when we gapped up over this line this morning, you know, I don't get a real good feeling going long on a gap up over this line. I would, however, have a good feeling about going long, at least for a short-term trade, on a back test of this line right here. That's kind of what I'm looking for. I may or may not get it. Additionally, if we'll look at the level where this kind of started to sell off a little bit this afternoon, and if we want to draw a line, we can do that. Okay? I would say that is a technically important line. If we were to sell back down to the 1270s and then come back and take that out, then this could be setting up a move to over 1300 sometime in the next week or so. So that's kind of what's going on with the S&P 500. Let's also take a quick look at the Russell. Okay, here's our Russell 2000 index. I have drawn that same line And if you want to get really particular about this, if we look at where this line is drawn from this bottom, you can see that it actually looks like it may want to try to recover and get back up into this pattern. If that happens, then I could see that move in the S&P to maybe, you know, the 1320s, 1330s. As a matter of fact, I think that move likely will take place in the S&P. But what we need to watch out for is, if that happens, we need to look out for a potential short-term top forming, let's say 1340s, something like that. Because if that was to be the case, then what we would end up with in the S&P would be a possible head and shoulders top. And if we do get a rally, if this is our low right here, then we could already take a look at the neckline on this possible formation. Now look, I'll be honest with you. Well, I'm always honest with you, but let me continue to be honest with you. I've gotten on people's cases when there has been a left shoulder, a head, and a right shoulder already formed, and they've said we have a head and shoulders pattern here. Why have I gotten on to people when they've said that? Well, because it's not a head and shoulders pattern until the neckline is taken out. Let's go back to about a year ago. We had a left shoulder, a head, and a right shoulder. As of the middle of September, however, that was not a head and shoulders pattern or an inverse head and shoulders pattern. It was just 3 dips. This did not become a head and shoulders pattern until that breakout in September. Now, if we do end up with a head and shoulders top right here, then I would look at that as something that would be setting up probably a little bit more of an intermediate trend correction that could even go down as low as test the neckline of this pattern that never really got tested. And that would send things down into the 1100s. But that is very preliminary at this point. Right now, I'm of the mind to say let's look at things with a slight, not an overt, but with a slight bullish predisposition, because this has been a bull market, and since it's been going on for just a little bit more than 2 years, most bull markets go on for more than 4 years. Just the law of averages says this probably still has more room to run, but we are certainly apparently in some choppy waters here, where I think if you just need to be careful. You need to be diligent. If you're a good stock picker, have at it. By the way, I just noticed something. If we draw a line across this top and this top, looky there. That almost makes that make sense right here, as if this were a little pattern right here that once it got over 1225 or so, then maybe it's coming down to back test that. Anyway, whatever. I'm tired, folks. I've been trying to stay busy with my business and putting in some long hours last week, and have yet to really recover from that. So anyway, what am I looking at? Well, you know, I'm still got cash. I didn't go all in today. I am looking for a return. Come on. Sorry guys, I'm a little disorganized. I'm looking for a back test of this top red line to potentially go a bit longer than I am already. Such a back test would probably take us back down to the high 1260s, low 1270s. I'd love for that to happen tomorrow. It may not, but it would certainly be good if it did. It's also possible that we could languish around up here under this line for a little bit, and then come back down for a back test of 1250 or so. Because this line never really got back tested here from the previous low that was of technical support, of technical importance back here, the head of this pattern. So the right shoulder of this small inverse head and shoulders over here did not hold, but at least of right now, I would expect some support around the 1250 area. So that's kind of what's going on right now. It's still a little bit unclear which way the markets for sure want to go. So like I said, I'm looking for a move back down to here and then a bounce, and then just kind of play it by ear. Look, appreciate you watching this video, and I would also appreciate it if you could come by freechartvideos.com and spend a little time and consider joining the forum. Those of you who joined, I appreciate it. I think we got a pretty sharp bunch of folks over there. So come on over to freechartvideos.com and help support what I do with your web traffic. Thanks.